The strategies and concepts discussed are for educational purposes only and do not represent specific investment, tax, or estate planning advice. Investing carries an inherent element of risk, and it is possible to lose principal and interest when investing in securities. No strategy can guarantee a profit or prevent a loss. The views expressed represent the personal opinions of the presenter or featured guests, not necessarily those of USA Financial or its affiliated subsidiaries. Any opinions or forecasting statements are subject to change at any time and without notice. John Cyndia is an investment advisor representative of, and advisory services are offered through USA Financial Securities Corporation, member FINRA SIPC, a registered investment advisor. Life Stages Advisory is not affiliated with USA Financial Securities. Life Stages Advisory, Dean or Remington, or any guest we have are not affiliated with USA Financial Securities. Welcome to episode 68 of WTF, Wealth, Tax, and Finances. I'm your host, John Cyndia, certified public accountant, personal financial specialist. Today I have Remington and Dean back in the studio.
Hello.
Hey.
Hey. Howdy.
It's been a few weeks because we had so many episodes that we had sort of in the bag that we took a few weeks off. I was down in Florida last week, so we're trying to see exactly what's going on with the economy, the opening up, and everything after COVID. Was down in Clearwater, Florida. Gorgeous weather, great time, lots of seafood, lots of grouper.
Why didn't you bring us, John?
Because you were down in Florida during spring break. Don't you remember?
Yeah, you're right. I didn't
That's
bring
right. You didn't bring me, so
Oops.
But
you caught me red-handed.
Exactly. But what we noticed down there is the same thing that's going up here in Ohio. And what I wanted to bring that into discussion today is talking about the dynamic between economy and inflation and how they're sort of diametrically opposed, even though everybody's saying that there's not any correlation. Well, there is, but then there isn't. So what am I talking about? Well, let's look at it this way. When we start looking at everything, we've had all these trillions of dollars being printed, okay? Handouts left and right with the administration going on here. We've had the third stimulus package coming in. Some of the unemployment benefits are starting to run out between May and June. And when you start driving around, and we see just in our area, I've had 3 or 4 restaurants close because of lack of the ability to hire anyone that's willing to work. All right. And it's not too hard to decide when someone gets $400 or $500 from the state and then they get a supplement of $600 from the Fed. Now it's down to $300. They're still, in most cases, or in many cases, they're still making more money, and the government's paying them to stay home and not work. And we hear from the Fed that there really is no inflation, and then you hear from other pundits that are saying there is inflation, but you can't see it yet. Well, I think it's there, and people just don't want to see it, and they're listening to the wrong people. Because what ends up happening when you have all this money going everywhere, and there is a shortage, you see that they're saying that the housing spikes are coming up and everything else, but you're short of all this material. So you don't have any building material, so the prices are going up. You don't have, you go to the restaurants, the ones that are still open, and they might only be a partial capacity because they don't have enough servers in order to fulfill the needs of the restaurant
Can I hop in real quick?
Yeah.
Just going on the lumber thing you mentioned there. We just had an estimate to put a fence in. Our yard is tiny. You've seen pictures of it.
Yeah.
How much do you think they were going to charge us for a wooden fence?
I would say because of where we're at right now, $5,000 wouldn't surprise me.
$10,000 for a wooden fence right now. It's absolutely disgusting.
To put it into perspective, Rem's yard's maybe like 2,000 square feet.
It's about, like, I don't know if they can see this table, but this is like my front yard.
It's a city
basically.
lot, so it's about an eighth of an acre is probably what it would be if it's that much.
I mean, we've got like a more yardage, I guess, in the back, but that's like a easement, but the front yard is tiny, and they're like, yeah, 10 grand, put a fence up, easy peasy. I'm like, no.
10 grand for the fence, and what'd you pay for the house?
70,
Okay.
70 something.
So you're talking a huge percentage of what the,
What the house is even worth.
No.
yeah, exactly.
Ugh.
Yeah. And the thing is that we have too much money being printed. We have too few goods because of all the people that have gotten laid off. There are there's no production. Okay. So you have lack of goods, no people wanting to work. We're not producing anything. And you have all these dollars chasing what they're wanting. They want to consume. And they're staying at home, or they're wanting to go and out to dinner, can't go because restaurants are either closed or you're having to wait in line. You've got 30% capacity. So everybody wants to go do something now that the everything's starting to open up after the masks are deemed irrelevant at this point, and so many people have been vaccinated that they're looking around and people are going stir crazy. We noticed a lot of that down in Florida. They hadn't had masks on for quite a while, and we were trying to get used to it because every place we went up here in Ohio, you had to have a mask on no matter what you did. And now it's starting to loosen up here too. But you go down there and the people, it's like, it's a COVID PTSD situation is what I'm looking at it and referring to it, because people are just like acting like lunatics down there. And we were Clearwater, and from 4 till about 9, 10 o'clock every night, every 15 minutes, there was an emergency vehicle, whether it was a police car, a rescue squad, or a fire department. And it was coming back out right down through where our condo was. And it was just nuts. And it was the crowdest on the beaches we've ever seen it. And I've been down there for probably over 30 years, off and on. Yet they said, I'm thinking maybe there was 5,000 to 8,000 people on the beach. And they said in March, during spring break, during that month, there was 1 million people that visited Clearwater. So that's 35,000 a day on average. So that was 7 or 8 times what we saw, and we thought it was crowded. And it was nuts. It would take you 45 minutes to go a half to a 3/4 of a mile down the street if you had to go by car, trying to go over the bridge. So we would walk, and we'd beat most of the cars
traffic.
just going down the street. So, we did a lot of walking and everything. But as the economy's opening up, the thing that people are finding now that once the unemployment benefits run out, they're going to go out. I heard today that there's close to 24 million people that are going to be coming off of unemployment supplement benefits. And I can't recall if it's in May or June here. But it's imminent. It's coming up. So unless the government turns around and is going to do another supplement, go from 600 to the 300, there's going to be 20-some million people looking for jobs that aren't going to be there. So they're not going to go back to the restaurants because they're closed. They're not going to go back to some of these hotels because they're either closed or they've been hurting from the COVID, shutdowns and everything. And it's going to take a while to ramp up some of these other businesses that they've either gotten hurt, they've gotten closed, they have not been able to find the personnel to work. So we're not producing the goods, but the people are still have all this money and they're spending it. So where are they getting it? Well, they're getting it from China because they're willing to work. So now we turn around and what are we doing? We're exacerbating and increasing our trade deficits because all of our money is going to China. They're willing to work. We get it over here, and all our dollars are going back over to China. So the trade deficit's expanding, and they're saying that, well, there's no inflation because we have all this money and people are buying things. And that's the other thing that they said, oh, look, the economy is recovering. Well, the economy is not recovering because we're not producing anything. So all of this stuff is coming from offshore and from foreign countries coming in here, but it's all of our dollars from the governments going back out. So we're not producing anything. So at some point, we've got to get back into our real economy. And if businesses are closing down and you incorporate the tax situation that they want to increase taxes on the rich, the rich have money. So what do they do with it? They either spend it or they invest it. And if they're going to get penalized from investing, they're not going to invest it. They'll go spend it. They can go travel and do whatever they want to, so it's probably going to be more on pleasure. So if that's the case, they're not going to spend money to buy a business or incorporate or put money into a business. They'll just shut it down. So now all of a sudden you're losing more jobs. So now we're back into that cycle again where we won't have any jobs. So there's this dynamic that they're saying there's no inflation, but then they're saying, oh, we got this great economy going. Well, I think it's all it's smoke and mirrors is what it is. The government has goosed an artificial economy because they've given all this money to people, and the people are just spending it. It's on TVs and electronics and different things for the house and whatever, but it's all temporary, and the people have chosen to take the benefits and spend them. And in some cases, they may be paying down some bills, but for the most part, it's being spent, or they're putting it into the market. And they're doing these, these little, what do we want to say? Like the things that we can't say on here.
Yeah. I mean, I think
the little stocks and the stuff with Robin Hoods and all that other stuff, you get into these little brokerage things.
When it goes back to the whole job market thing, I think you have a twofold problem. And I've done a little bit of research on this, and we just discussed. I just graduated from college.
Yeah, crowd goes wild.
Confetti. Rem, you can put that in. Confetti.
All right.
So what you have is like, I'm just thinking of like local businesses near me, not anything that I would apply for.
Mm-hmm.
But there was a gas station by me that was hiring prior, or not even prior, but I would say during COVID, $14 an hour for a supervisor, which whatever. It's a gas station, you know, it's like, work's not that hard. They're now hiring for $18 an hour for the same position. So what's your issue there? Do you have people not applying? Because I'd go on a limb to say you do have people applying. So this is why I say this is a twofold issue.
Mm-hmm.
So in my research that I've done, just, basically via the internet, jobs that I've applied for, just everything in general, these companies don't even call you.
Mm-hmm.
They might have 200 applicants. Who are they calling? Who's getting these jobs? They don't. Who are they interviewing? Mm-hmm. You know what I mean? Like, is this job up for a joke? Like, is this just like to appease people? Are you actually hiring this position? So, like, does the position exist?
Well,
you know what I mean?
In some of those, if the businesses are that small, I've hired for people before years ago, and I might get 20 or 30 resumes. I would be able to, because of, seasonality. Originally, when I started, was mainly tax stuff. So I had, half the year that, I have time and available to sit there and go through this. But still 24 to go through. If you've got 50 or 100 or whatever, and you're shorthanded and you're trying to hire somebody, you don't have time. You don't want to take the time to go and look at this stuff. So I think a lot of that is just the fact that the small companies either don't have the capacity or don't want to pay somebody to go and help screen what they're doing or finding a company.
Right.
And they're just delaying it. And it's like, yeah, I know I got to do this, but they're procrastinating and they're just not doing it until it gets so bad that they will have to find somebody, and then they'll probably hire the wrong person anyway.
Right.
But you go into, some of these, the big box, Home Depots and Lowe's and stuff like that, the ability for these people to go and hire somebody. I've talked to a lot of them at these larger companies, and their main thing is that even though they may have hundreds of resumes, they can't have anybody pass the drug test.
Yeah.
So you've got one position, you're looking through 300 people to get one person to get hired, and it's not just that. I mean, it doesn't take much skill for a lot of those jobs. They're not skilled jobs, but still somebody has to fill those. And if they don't, I had walked through one of the stores here just in the last few weeks or so, and you go in and you see 5 or 6 of these people standing around. Well, they still have capacity, but there's nobody in there now. So what's happening? Are the people running out of money, or they've already done their projects over the last year? They're not into the self-home improvement stuff anymore. I don't know what the deal is there, but where there might be 5 or 6 of these employees in there and they're busy down some of the aisles, there wasn't anybody in any of these aisles. So now, do you have too many people, even though they're short on staff? But then you go into restaurants and a few of the vineyards around, they've cut back to 50% to 25%. They're not having any of the events. They've cut down the events because they don't have anyone to be able to help them with the bookings and everything. And they don't have any of the wait staff. They don't have bartenders. They don't have anything. So they've got this multi-million-dollar facility. And
they can't even use it.
They can't use it, and they're probably just barely hanging on to break even from a cash flow standpoint because they can't find the people. And it was pretty much any place we went down in Florida, if it was on the beach, they still had help wanted signs down there, and it was crowded. It was crowded.
Yeah, when we went down there in March, it was literally every place we ate at was hiring.
Oh, yeah.
Every single one of them.
Every one of them had help wanted.
Yeah.
You go here in Ohio, it's help wanted signs all over the place. And, you start thinking about what's the deal here. These businesses are just hanging on because it's not because they don't have people there. People get frustrated from waiting 45 minutes to an hour when they should be able to get seated. We've been in a couple, and it's just like, 3/4 of the place is shut off because they don't have the capacity. Even though COVID is opening up, the restrictions, even if they wanted to open it, they don't have anybody to serve the individuals coming in or busting tables or bartending or anything like that. So I think there's going to be a rude awakening for these people that have just taken advantage of this stuff, because now everybody's going to be going for the same job. Now you're going to have 50 people going after one position at a restaurant, and the restaurant doesn't exist anymore. So, it's like, what's going to happen here? So
yeah, I think end of the May in Ohio, you have to start proving weekly that you're applying to jobs.
Mm-hmm.
So we'll see what happens.
That's always been a requirement, but they used to do it online.
They relaxed it during
they had
the
nothing.
COVID and everything.
You didn't have to
do anything.
No.
Yeah, so that's part of the big issue is, if you're not having to show that you're applying for jobs, you're just not going to apply for jobs.
Yeah.
You're not even going to try to get work. But now you have to show that you're trying to find a job.
Yeah.
And that'll probably eliminate some of this issue, but who knows? We'll see.
Yeah. And, in the meantime, like I said, we've got this sort of a bifurcation here between inflation and the economy. And inflation is there. And that's what I was looking at to say, okay, what should you be looking at to try and weather some of this stuff? Getting into some dividend type stocks, looking at some of the commodities, like some of the precious metals and stuff. I'm not saying, if you've got 10,000 or 110,000 to put in, you still need an allocation. So whatever that is, I mean, if you got 10 grand and you have 1,000 or so allocated toward that, put some into precious metals. If it's $200,000 and, you're looking at 3 to 5% of that, 10, 15 grand to help offset, because that's really the only other inflation thing, because the devaluation of the dollar is going to happen off of this too. So you've got the capacity of the dollar to maintain itself is going to be hindered. And then you've got the inflation. So, look at precious metals, look at some of these strong dividend stocks, something to weather this. The speculation that's coming through with a lot of the younger people on, whether it's cryptocurrencies, whether it's
your Reddit stocks.
Yeah, everything that's on Reddit, and everybody's saying, hey, do this, do that, or whatever. The only people that are making money off of that are the ones who are promoting that thing, and they're either taking an upward direction or a southern direction on that thing, and they're going to short it one way or the other. So there's too many gimmicks being done.
Yeah, and not to go off topic at all, but too many people that I've talked to, and we've gone back to this so many times, don't understand the importance of an exit strategy, especially with how volatile some of these stocks people are investing in.
Mm-hmm.
So I have a buddy I work with. He's got 35 shares of a Reddit stock that's up heavy currently. And I keep asking him, he's one of my employees. So I ask him like every day, I was like, dude, do you have an exit strategy? Well, when it gets to $10,000 a share, I'll sell. It's not going to do that.
Oh, boy.
Alex, if you're listening, it's not going to do that. So I keep telling him, like, you need, and what is your exit strategy? If you pulled your initial investment, what have you done?
Mm-hmm.
And it's like, no, I'm just holding until the moon.
Yeah.
You're going to have nothing.
Yeah.
You know, that's the whole thing. It's like, I told you I turn 80 into 120. I'm going to turn 120 into 200. And then I'm going to put that into something nice that a dividend stock, or heck, maybe even a precious metal now that you're talking about those.
Yeah. Well, it's, when the was, and some of these cryptos were going crazy beginning of the year, I'd put some money in. It more than doubled. I took my initial out in a few $1,000s, and then I let the rest ride. Well, I'm still up, but I'm down.
Right,
right. And it's like, what are you going to do?
You still won, but you're not fully winning.
Yeah, so I'm just hanging on to see what happens, and is there going to be a breakout or what? But I'm not, waiting for this stuff to go to $8 billion a share or anything. And the crypto thing, if you've got that FOMO situation we talked about before, anytime you invest, you can't invest anything that you're not willing to lose. I don't care what it's in: stocks, bonds, municipal bonds, corporate bonds, ETFs, any type of derivative, options, cryptos. Doesn't matter. If you can't afford to lose it, you really shouldn't do it. So, if you've got a couple grand and you sit there and, you've got other savings and stuff like that, and you want to do crypto, go ahead and do it. But you have to realize that you might wake up the next morning and the $2,000's gone. You can't go boo-hooing all over the place. But if it goes up to 10 grand, it might go to 100, it might go back to zero. You just have to be prepared for that. And I think right now, as we're getting back into that irrational exuberance type of a situation again. A lot of people think that there are bubbles. Some of them say there aren't bubbles. I think there's going to be definitely a pullback here, and you just have to be ready for it. Are you going to weather it out? If you're closer to retirement, you may want to get some cash. There's nothing wrong, like I said before, having a cash position. I've got some clients that have anywhere from 25 to 50% in cash right now. And we're looking for that for the opportunity. I mean, we've taken profits because we're up 70, 80, sometimes 150% on stocks in the last 2 years. I had one client that had the equivalent of 17 years of max contributions in his 401k. Okay. Why? Since when is it a bad thing and a dirty word to say take profits? I'm not timing anything. He was up big time. We took the money off the table.
Yeah.
Now let's wait for something.
Yeah, that's what I was going to say.
Let's
wait for what's next. What's going to come? You don't know.
And with the market going crazy and still up, I've been finding bargains on stuff that's pulled back 30, 40, 50%. They're still good stocks. We're looking at everything else. Earnings season just went through. We've bought a lot of those. To me, it's a value play. And we started repositioning some of the people, legging back into the market. We might have 10 to 20, 25% we've been putting in. Had a couple clients we did that with yesterday. We might hold off for the rest. But I mean, I've got millions of dollars on the sideline. We're just waiting. But, it's not like, I'm trying to time the market, man. No, it's like right now. Why? It's got a whole lot farther to fall than it does to go up until it takes a breath. That's all I'm saying. So don't get excited. And the other thing is on this real estate situation, there's down in Florida, the condo we stayed in was built in 2004. The guy bought it in 2008 for like $400,000. Right now, it's valued at $1 million. About 1,800 square foot right on the bay, 7th floor. Nice property and everything. It also had an $800 or $900 a month condo fee.
Jeez.
And I'm sitting there like, no,
I'm good. I'm good.
And there are properties probably built in the 30s and 40s on this little bay area down in Clearwater off of one of the canals. There was probably 5 properties out toward the water. And in between each property, there was maybe a 4 to 8 story condo, newer. Those properties, and you're talking a ranch, probably 800, as little as 800 to maybe 1,500 square foot ranch. It was built, like I said, in the 30s, 40s, or 50s. And they're looking at anywhere from $10 to $15 million for that property. Well, nobody's buying it yet. Somebody probably will, but they're going to have to buy 3 of them. So they're going to have like 40, 50 million bucks just in the waterfront property. And then they got to go straight up. So you're looking at probably something that's going to be 10, 15, 20 stories or more. So they're going to buy these, huge, high condo facilities because the property is so expensive that they can't spread out. They got to go up. So that's what's going to be happening. And you can see part of that down there now. People are just still coming in. It was something stupid. It was like 10,000 a week coming down in that one area down there.
Yeah, I don't know if anyone's familiar with the Clearwater area, but it's not very big.
No,
it's not a big space.
It's a nice area, and we loved it. We've been going there.
Yeah,
I've been going down there for years.
Yeah, it's beautiful down there, but
it is just so congested at this point.
Yeah,
and we're here in May. I've never seen it that crowded in May. And so it's whatever it is going on is happening. It is happening. It's real, but I still think that there's going to be a breather at some point on the real estate market, the stock market, and pretty much everything else. Just get prepared for it is all I'm saying. Some pundits say it's going to get worse than that. We're going to back into a huge, longer recession, depression. Other ones are saying it's just all going to blow over. It's transitory. Yeah, it's somewhere in there, okay? But I still think you have to be aware of what's going on. And there's no reason to have to turn around and, if you're looking for a property, and turn around, pay another 20 or 30% over and above what they're asking for it. I mean, you're just chasing stuff. You don't chase yield. You get burned on that in the market. You don't chase property values when stuff's going on. If they don't justify it and there's no real intrinsic value, what's it worth? What's it worth? I mean, if there isn't anything, there's no value to it. There's no value. Just because it's something that might say it's worth $280 a share today, and it was only worth $1.50 4 months ago, guess what? It's probably not even worth the $1.50 4 months ago, So anyway, anything else to end up on this one?
Nope.
Just
I think
to think about.
Yeah, things to think about. I think time will tell with the unemployment benefits ending, I think federally September.
Some of them were coming up in May and June. I don't know if it's
I can't remember the exact time frame, but time will tell with the job market. Everything is going to be contingent. Honestly, I think of that, of the unemployment benefits, being sucked up back to normal. Go find a job.
Yeah.
If you're listening, please find a job.
You know who you are. If you're sitting there with a big mouth of, full of popcorn, sitting there with your feet propped up on Netflix or something.
Just waiting.
Yeah.
But
am I envious? Yes, we're all envious.
We are envious.
But damn it, get your butt back to work. Anyway, until next time, thanks again. You can find us at JCyndia at lifestagesadvisory.com. I'm trying to sit here and think. Lifestagesadvisory.com on the website. Email me at JCyndia. It's been, like I said, it's been 4 or 5 weeks.
You're a little out of it.
You can.
I gotta get the
REM's out of it too.
Yeah.
Well, I was gonna say you can find us on YouTube,
yes, that's what I was
Spotify,
gonna
Apple
say.
Podcasts, and all that. If you're on the YouTubes, give us a like and a subscribe. Comment any questions you've got for John. They can be related to inflation. They can be anything really, but
Real estate.
Tell
him you like his shirt color.
Yeah.
Tell him you like my hoodie color.
Tell
It's
him
a new hoodie.
Tell him you want to see the hat collection.
The hat collection, yes.
All right, anyways.
All right. Thanks again. Bye-bye.